Welcome back, friends. In this video, we look at the US markets, the Dow, S&P and Nasdaq, as we begin the week starting August 7, 2023. Now, let's go over the quick backdrop. The important data that came out on Friday was the US July payrolls data, which showed a gain of 187,000 versus an estimate of around 200,000. And that was good because it shows that economy cooling a little bit, and that's good for the Federal Reserve in its interest rate hike decision. They will be seeing that the payrolls now, the jobs are also beginning to cool down. However, at the same time, we saw the unemployment rate come down to 3.5% as compared to 3.6% estimate. We have seen the CPI peak at 9.1% in July of last year. And although it has been consecutively coming down thereafter, there is always a possibility that the headline CPI numbers of the 9 months of fall may show a little uptick. There are many things like the food prices and other drivers which can get the CPI ticking a little bit upwards, or at best it can just be flat when the numbers come out on August 10 in the US. We go a little further, and what are the three factors that are crucial to remember or keep in mind as we look into the markets, not only this week forward, but thereafter as well. First thing that we see is that Japan is trying to control its yield curve very cautiously now. Another thing is that the oil from mid-June at $67 has now crossed $80. In fact, Brent crude crossed $86 on Friday. Third thing to keep in mind is that US Treasuries are about to issue $1 trillion of securities this quarter after $50 billion in last quarter. And all this is going to exert an upward pressure on the yields. Do not forget that the rising yields has been one of the this is going to have an upward pressure on the yields. Now, the yields softening has been very helpful in the rally, and that has taken place for the last few months. Inflation coming down, so the yields coming down, and expectations of a Federal Reserve interest rate cut. All this has been very helpful in this rally that has taken place for the last few months. If the inflation continues to tick upwards, more treasuries being issued by the US Federal Reserve, by the Treasury Department, and also by the you see the oil prices on and tick upwards. Some inflation readings which may come out as showing a sticky inflation. All this is possible, and this can all lead to yields going up even further. The 10-year is already over 4.08%. So all these things will exert upward pressure on the yields, and yields have been the bigger driver of this year's rally. Even the Magnificent Seven that we talk about, the Apples, the Google, Metas, all this has been helped by a good lowering of the yields, a little softening of the yields, and that all could begin to change. So I'm cautioning you on that front, and please keep that in mind. Now, Apple announced its earnings a little lackluster, declining iPhone sales. It is showing almost zero revenue growth, and Apple quotes at a price earnings of 30. We have Facebook growing at 13%, but has a 24 multiple lower than Apple, and a higher growth rate being projected by Meta. Google, 8% growth rate, but has got a lower price multiple of 23. And do not forget the fact that we have something like Microsoft with its open AI and ChatGPT is also going to be something that one needs to look at. It's all getting incorporated in the earnings, but not to the extent and the measure that has been desired or expected or projected. Intelligent cloud earnings are also down. Yet look into all this. Every stock, do not forget, is not like Nvidia, Ericsson, Juniper, and there is a lot of pressure that is getting exerted on in fact, in the Magnificent Seven, there's a division taking place into various stocks, and the promises which they hold out. All this is going to come into play into the markets as we go forward in this week. The markets have fallen for last 3 days in a row. They are down, but they are not out. And therefore, the little steam, enjoy it. before the big, as I've explained to you in detail in this video, the big turn comes. When it will come, what extent, and I think it's going to be good and nasty. We will tell you in Prime and Prime Plus. Be a part of it today. The number to get in touch is 982-086-1044. Happy investing and have a great investing week ahead. Take care. Bye-bye.